What's good, family? It's your man Harrison back again with another video. In today's video, we're going to be breaking down gold in Forex. What is happening now, what I'm looking to do, and where I'm looking to take it. So let's do it. As you guys know, I'm very bullish on gold still, right? So let me quickly run you through this real quick. Let me quickly show you the daily time frame. Daily time frame, look, they did not beat this low. So I told you guys, if they had beaten this low, I was going to stay bearish. They have not beaten the low, as you can see, and they're pushing up. They're pushing up. And this is what I wanted to see. This is what I like to see, right? So they came to test the low. They couldn't beat the thing, and now they're pushing higher, right? So far, there's tons of money on gold. You can see, look, there's equal highs, there's equal highs, and there's more money up here. There's tons of liquidity up here, right? So these money areas, these liquidity areas are going to act as a draw on price. Price will be drawn towards these areas. So you have to ask yourself, where's the money, right? The money's on the top side, family. The money is on the top side. There ain't nothing left below. There's nothing left below. So this move down here, it swept that liquidity down here. It actually swept the liquidity beneath this low, but it did not break beneath this low. It did not break beneath the body of these candlesticks, right? So we're staying bullish with this pair. We are very bullish with this pair still. And like I said, there's money up here. There's money up here, there's money here, and there's also money on the top side. So these things should act as a draw on price over time. But even if you wanted to take it to this level over here, take those P's and then just see what the market does, you can do that too. I'm not saying, for example, you should hold all the way up there. If you want to swing trade it, and that's your decision, right? But you can do what you want. This is my opinion of what's going to happen. I believe it's going to get to 2000 in 2021, and it can even break above these highs too. I'm staying bullish. I'm staying very, very bullish. And so, like I said, it did not beat that low, and so I'm staying bullish. So now let's break this down on the lower time frames. Let's go to the 15-minute time frame. All right, so family, this is the 15-minute time frame. Okay, this is the 15-minute time frame. You can see what happened. This is that low. That's that low for the previous low. This is where price started to accumulate. And let me just quickly let you guys know about something, right? So I don't actively trade Wyckoff. So this is what you're seeing right here is Wyckoff. Okay, there are other YouTube channels who literally do bits upon bits on Wyckoff. So just to name a few, there's Pips of Persia, and there's also MentaFX as well. So yeah, Pips of Persia and MentaFX, they do absolutely bits on Wyckoff. So if you want to know this in detail and stuff like that, then yeah, holla at those guys. All right, so guys, so I don't trade this day in, day out. Okay, I know there's people, really advanced people, can see this stuff. They can see the Wyckoff within bits, within these moves and everything else. But when I do see like a blatant accumulation and I see a blatant Wyckoff, I will mark it up. So for me, like I said, I'm not advanced at this. But anyway, guys, check this out. First of all, I didn't know this was Wyckoff until when it got to that test phase, this area down here, the test and the last point of supply. I didn't know it was Wyckoff until then. But just to break this down real quick. So first we get the selling climax. So this is where the selling basically comes to an end. Okay, people take lots of profit off the table at this point, right? And then you get a push up, which is known as the automatic rally. This rally up is caused because of profit taking. So this is just my understanding of it. Like I said, I'm not the best at Wyckoff, but hey, I'm gonna go ahead and show you what's happening with gold right now. Once you have the automatic rally, this is normally going to be like your baseline. This is where price needs to test and then eventually beat to confirm that it's going to go up. And then you get a secondary test. In other words, all of this is basically they break beneath this low. So this level down here, they run out the stop losses. So in other words, there's a manipulation of this low down here. Okay, so I'm gonna quickly mark it up for you over here. That's one manipulation. Then there's a move up, as you can see, to test out this AR level. Okay, this AR level, which is the automatic rally level. They test out this level. Sometimes they beat it, sometimes they don't. If they do beat it, it just shows a sign of strength in phase B. So basically price isn't ready to take off yet, but then it's just a test of this level. And then there's another manipulation. So now check this out. This is the low. This is the current low over here, right? This is the current low. So I'm gonna put a little line over here. Okay, that secondary test. They trade lower. Yeah, how you know this is going to go down is because of the equal lows, right? They produce liquidity down here. Retail traders go long and their stop losses beneath this level. And as you guys know on my channel, look, we know there's money down here, right? We know there's money down here. We know there's money beneath these lows over here too. So they run out all that liquidity again, taking all the money from the early retail traders who are going long, taking the money beneath this level and this level. So there's another manipulation of the lows, as you can see. So this is that secondary test in phase B. In other words, they're just manipulating the lows again. And like I said, it doesn't really matter about the terminology. If you just understand what they're doing, they're manipulating the lows every single time. And then eventually you get another manipulation of the lows. Some people can probably even identify the Wyckoff in here, because I know there's people that can do that, very skillful, but I'm not trained in Wyckoff like that. But anyway, they manipulate the lows, as you can see, and they produce that spring. Okay, so I managed to get an entry right down here. At the time, I didn't know it was a spring, just letting you know. There was other reasons how I got into this trade. They produced a spring, as you can see. This is the spring. So in other words, just another stop hunt. So they've manipulated the lows every time. So this low got manipulated, that one got manipulated, and that one got manipulated, right? So this is that final spring. In other words, it's the stop hunt. And then look at this. this. This is the short-term high, yeah, that takes out the rest of the money down here, okay? So this is the short-term high that needs to be beaten, yeah? This is the short-term high that needs to be beaten. So the moment they trade higher, okay, down here, they trade higher and then they pull back. This way you can get that next entry. So this is basically the test level where they're testing this level, okay, and then they push up higher. Just to show you something else as well. And like I said, there's other channels who are, you know, pros on marking up Wyckoff like to the T. Not me, right? I'm not a pro, and so, but I just want to show you what I can see in gold right now, just to show you some more stuff, right? So check this out. Some people would have been going short for gold, right? They would have got a couple bounces from this trend line. Price would have come up to this trend line to the T. So look, they're looking to take your P's. It would have come up to this trend line over here and bounced off to the T. Everyone's getting excited and whatnot, and so people thinking this is going to go short. The trend lines are so subjective. You could have even used something like this as well. I don't use trend lines at all. So if you had used this trend line over here, let me just make this a little bit more perfect. So if you use this one over here, you would have got your bounce over here, okay? Would have got another bounce down here, and then they would have stopped you out and stopped you out down here as well. So people who were selling from here and here would have got stopped out with this wick here, okay? So let me quickly delete this one now. And if you use this one, if you like, you know what, that one flopped, it must be this one. You got your bounce, you got excited, but look what they did. They ran you out, and they ran you out non-stop. They gave you no chance to even close off your trade. Okay, they literally came up to run you out. So basically what I'm trying to say is there was also a manipulation of these two trend lines there as well. And so how you could have called entry from this if you didn't have an entry from the spring or the test, right, is this. Check this out. You saw a little smart money reversal in here, right? So look at this. You produced equal lows or relative equal lows down here, okay? As you can see, produced relative equal lows, and then price them pushed up over here, okay? So retail traders getting excited again, loading up on those buys. Retail traders putting a stop loss in this area down here, right, in this area down here. But look what they did. They ran out the stop losses first and then took off. So let me just quickly break this down. This is the short-term high that takes out the liquidity beneath this low. So this is the short-term high that produces this leg that took out the liquidity beneath this low, took out those retail traders who were going long a bit early, right? So that means this is the short-term high that needs to be beaten, okay? And then you get a pullback and then you get your entry. So this is the short-term high that needs to be beaten, okay? So this one right here. So it did that over here, beat the high, pulled back. This way you could have got your entry within this candlestick over here, okay? And then you could have taken it long. So from this level now, then price is going to start doing higher highs and higher lows. So as you can see, higher high, higher low, another higher high, higher low, and so on and so forth until it gets to its desired target. This is that phase D, phase E level. So once it breaks above that AR level, this is that AR level, this little line over here. Once it does get above there, now this is in phase D. Once it breaks above there, it's known as the sign of strength. That's the phase D level. So basically price is ready to take off. Then you move into phase E, basically, which is that mark up level where price is just going to keep on producing those higher highs and higher lows and keep on rallying up to the upside. You know where those targets are. I'm going to show you one more time where I'm looking to target on gold. So look, there's money up here. Even if you wanted to stay in line with this lower lows and lower highs, if you took it to here, there's money here, right? Took it to this level down here, there's money at 1821. You're good. Do you understand? But for me, I'm very bullish on gold. So this is a swing trade. I'm going to be swing trading this. I'm going to be adding multiple positions as much as I can. This is just my opinion, family. This is not me telling you guys to buy gold. If you are going to buy gold, make sure you do this on your demo account. Trading is very, 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 very risky. You trade on your own accord. You take the risk upon yourself. Make that decision for yourself and you take a trade on your demo account, right? And you do what you want. If you want to go and trade live, that's off your own accord. So like I said, there's money up here, and I've explained so many times why I believe gold is going to get up here, and it might take the whole year, it might take the rest of the year, but look, I'm going to be holding this trade for the longest time. Obviously I'm going to be taking profit along the way and going to be adding positions along the way as well. Anyway guys, like I said, you know, I'm not the best at Wyckoff. I'm not a pro at Wyckoff. There's other channels out there who do a much better job, okay? I don't trade Wyckoff day in day out, but I know they do, right? It's like it's their bread and butter right there. The two channels that I do know that trade Wyckoff are once again Pips of Pleasure. You can holler at them, and you can also holler at Ment Effects. Okay, Ment Effects as well. I know those two individuals really bang out Wyckoff. But anyway guys, that's my video done. Hopefully you guys like the video. If you do like the video, definitely subscribe to the channel. The goal for the channel is 50,000 subscribers by the end of 2021. So let's try and smash that goal. Also fam, don't forget to smash that thumbs up button. The like gang is already strong, they're already lit, and they're already active, right? And so time to up those goals. We're going for 400 likes on every single video. Let's go. Bonus clip for those people that actually watch the video to the end, you know, so some people like to jump off early, but you're missing out on all this good stuff. This is just a bonus clip for the special folk that actually watch the whole thing, right? So this is Wyckoff again. As you know guys, we're already buying from down here, right? And literally above that level now, what you seeing, right? So you're seeing price break higher Okay, you're seeing price breaking higher and higher and higher. And then this is just like another form of accumulation. So it could be a reaccumulation, but like I said, I'm not a pro at this thing. But the main thing about Wyckoff is you need to understand which lows are being manipulated, which highs are being manipulated. So in this case, it is the lows, right? The high is here. There's been no manipulation of the highs at all. It's only been manipulation of the lows. So as you can see, this was that buying climax, right? It came back down and you can see created a low. This low was manipulated here, right? Then it created some kind of liquidity down here, you know. So to retail traders, once again, they would have seen this as some kind of like triple bottom, or you know, something like that, like a triple bottom down here, as you can see, right? And so what normally happens is they will go long, they'll put their stop loss beneath this low down here. And so this was them running out that stop loss, right? This was them running out that stop loss. And then they pushed higher onto these up close candles. They manipulated this low, as you can see. So you're seeing these manipulations, right? And then eventually gets to this side, at this point down here where it starts to stall out. And then it starts to actually produce higher highs and higher lows, as you can see. And so for me, this was a short-term high, okay, that takes out the rest of this liquidity beneath this level down here, yeah? So and then when he was buying, some retail traders, they're taught to put their stop loss beneath the previous low, which is down here. And then once it started moving, they would have moved their stop loss into profit, or some of them wouldn't have, right? So what happens is price will trade lower, take all that money. Once it pulls back into this candlestick here, this is where you get your entry and then you buy it up. And then most likely there will be another pullback somewhere to this level down here, and then it will hopefully continue from there. But as you can see, like, you can use Wyckoff for entries. You can use it to understand what's happening during consolidation. And you know what? To be honest, look, even if you wanted to take this from here to this level now and you're done, you are done. All right, family. So yeah, this is the final bonus clip. Okay, I know I keep coming back because things are just moving, right? So yeah, this is the final bonus clip. You can see this already has achieved. If you just took it to, well, if you took it to this high, it's already achieved that. But if you took it to this level down here, check this out. This is already a 1 to 9ish right here, 1 to 9R, family. And so this happened in the space of roughly about 25 minutes. You've achieved your 1 to 9 R to R. You're good. You're Gucci. And you can scale off your position, you know, or you can take the full position off and, you know, fully securing that 1 to 9, or you can scale in your position and leave 10% to ride. That's it done. You can see gold is very bullish. And so this is what we've been looking for. This is what I've been waiting for, man. Been waiting for gold to be bullish like this. So finally we're getting that push. Finally it's putting some respect on the liquidity gang name. So guys, let's go. We're bullish.